Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in the Bookmap Discord Trader Lab community and also in YouTube? Thanks, Lucky. How are we doing in YouTube? All right, thanks, Mers. All right, good morning, everybody. Thanks for visiting the Trader Lab today. I'm your host, Tom B. I stream Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. We've got an interesting day today, and it's quite a contrast to what yesterday was. I do want to mention yesterday because it was quite interesting, especially towards the end of the session. And I found that it kind of shaped what I was looking for today in a conflicted, because trading is always conflicted because of randomness. But I came in, and I'm going to talk to you a little bit about it because I think about these things all the time, and it did shape a bias for me. So, and then the current condition of the market is very rotational and very compressed. So that adds to the complexity, at least in my trade plan. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. It's based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community, as well as a library of webinars on the process. Now, like everything, the outcome of any trader interaction is random. And that is something I believe that as traders, even though we live and die, on every individual trade, it's really the collective outcome of many trades, not any one. And the other part of trading is trading is really plan specific. So based on a plan that has a statistical edge, your job as a trader is to just follow your plan. And the thing about a plan is, just like in gaming, the way the casinos operate, the gamblers get paid. I certainly take stops. I know you take stops. That's just costs and overhead, cost of production, just part of trading. Now, we always emotionally, for some reason, don't like taking stops. I know it's the disappointment, and it's this thing about knowing or being right. I experience it, and you do too. So the emotions never go away in trading. The way to get to manage emotional states is to really have a statistical base to what you do. And when things don't go the way you, quote, expect them to go, and I don't like to use the word expect, I say suspect, because I suspect it's going to do something. I don't expect it's going to do anything. And even the terminology and the language I use in my self-talk is from years of being conscious and journaling my feelings. And when you expect something, and this is just very subtle, when you expect something, you filter out, your mind automatically is looking for the things you expect. If you suspect something, then you're going to be looking more carefully on both sides, kind of like a balance scale. And in trading, as the market's rotating, you've got this balance that is shifting back and forth. So at least for me, what I try to do is weigh the evidence. And then it still isn't, quote, it is a educated guess. So that's kind of what I do. But I'm very conscious of my self-talk and my language. And I suggest, and this may sound like such a minor, unimportant thing, but it is very important because this business, other than having a vetted plan with a statistical edge, the business is really about your emotional state and understanding how your mind works and how you might miss what are the elements that cause you to get stuck on one side of the market when the market might be giving you some other indications because you're just supporting your quote, what you expect, not what you suspect. Is it subtle? You know? Anyway, let's talk about. Now, I wanted to mention something about yesterday. At the end of the stream, I think it was the end of the stream, or if it wasn't, it was my narration in the Bookmap Discord Trader Lab community. I was on a short, and it was what's called a mean reversion trade. Now, it went into the close, now that I think about it, so it wasn't here in the stream. But what was interesting about it was a mean reversion trade is a return back to the highest volume. And you'll be seeing those today also in a shorter range. And it set up a short, but we had to come back inside yesterday's range to get to the final target. So for me, there was a short, I don't remember exactly what location it was from. I would have to go back. I'm not going to do that. But it was narrated in Trader Lab. Trader Lab, you guys know what the trade was because we were talking about it quite a bit. The market had to get back in the range. In other words, get past yesterday's high. So for me, the shorts were scaling, getting risk neutral, and then holding. And there was probably another 8 or 9 points if it would have actually gotten the target. It didn't do it. It couldn't get back in the range. So for me, I was saying, okay, new all-time high, could not get back in the range. We're going to open higher inside of yesterday's range, but above the overnight volume point of control. Let me show you some of these things. This is the open. This is yesterday's settlement. I don't know where the overnight volume point of control is. ETH mid. Yesterday's retail price, in other words, where the highest volume was, think of it like shopping, retail. And we're opening above all these levels. And then the ETH overnight volume point of control with the RTH open here. So I said, well, this is very interesting. I need to be thinking about a long because I have a high probability of getting to the ETH high. And while I don't have a lot of confidence in it, statistically, we can take yesterday's high, maybe, and then rotate down or do whatever it's going to do. So I came in with a long idea, let's say. So I'm going to show you the first trades I took. Now, I'm going to say is there's traders in Trader Lab who are getting short, so it's not, I don't have a monopoly on right or wrong. I just follow a plan. So I put the pieces together. And I know, here's the other thing, statistically, we favor, the probabilities are down here, but the first trade I was looking for was to get to this and then evaluate it. And either after this, look for shorts or whatever, then it's up to the participant. It's not up to me. So I don't predict anything because I'm not any good at it because I don't know anything until the structure develops. So I just try to go with what I perceive. So this is RTH open. It opens here. And by the way, if you're in YouTube, welcome to YouTube. The Discord trader, I'm sorry. I've been up early and I was very active early, so I'm a bit tired from it. I felt like I was in a Cuisinart this morning because of the chop. So, but I'm going to talk to you about these trades. If you're in YouTube, there's a link in the bottom of YouTube. You can visit the Bookmap Discord Trader Lab. There's no cost for this, but you do have to confirm your email address and then come over to Trader Lab. There's 60 PDFs of these structured trades that you can download and a library of webinars if you find this interesting. And those of you who've been following the stream, you know that it is interesting. And then there's days it's just, what is this? And again, other traders I'm sure do better than I do at times. It's just a matter of alignment and the plan. For me, my plan, today is just, it's not giving me much in the sense of reward, though I am currently sitting short, but that's not really relevant. It's not been a good morning for me because I took a lot of trades, which I don't like doing. And I got scales, then I get scratched. Take a stop, then take another trade, get a scale, get a scratch. So it's just been not a productive morning for me, but that's okay. So, and right now it is getting productive, but earlier it was just sort of like the term I use is I was like a flounder on the dock because I was flipping my positions around. And I have it in my trade plan that when that happens, I know I have a specific challenge because I'm in a two-sided trade. Nobody's taking control, and I'm trying to get position, but there is no edge for me. I need range in order for it to pay. When I get into tight range and chop, it doesn't pay for me. So I'm just saying. So anyway, market opens here. This is a developing volume point of control. Now my bias is long based on, even though I want to be short. So this is the thing. I want to be short, but I'm looking for longs. So, and because of the stat that's up on top. So I come down here. I see this is a micro volume structure. I see my sellers, they are absorbed here. So this is a first indication to me of a possible long structure. And this is my opening swing high. So I'm looking here because I got my early sellers. Now we had, an up day yesterday. We had new all-time high. Everything is lovely. We remember my last trade was a short yesterday, and we did not get back into the range, which suggests it is bullish to me in a higher time frame. Go up, opening swing high. Let me just get this. So that's kind of the prelude coming in, and then it's who takes control. So I'm thinking we will get sellers because of Friday, and then if we run out of sellers, we can rotate and take these guys out and possibly go to that ETH high. So that's kind of where I am. Okay. I get VPOC migration. So there was absorption here. I get my absorption here. I get a long, and I'm looking for this. And this is resistance. I got to label this. I call this a variable high volume node. So my idea is to come across and take out the opening swing high stops. Because if anybody sold this, they're going to have their buy stops here. So this is by trade. So I get long here, not here. Once I see this, why would I get long? Well, great question. I'm asking myself that, but that's my plan. So absorption is here. My buyers take over. I hit the mid in the VWAP. Now, what I know is if we think the trend is going to be down, that we'll see sellers at the mid in the VWAP. And they might be right. It's not right or wrong. It is anybody can be right. Or by right, it's not even a right or wrong. It's like if that's your trade, the right thing to do really is to just sell it. Well, I have a different viewpoint, as you know. And again, it doesn't mean that these guys aren't going to, hit the jackpot because the targets are down here. But I'm looking at least for these guys to get taken out. And then you got to see. So anyway, my long is here. My stop is under here. This is resistance, and I'm going for this. And then the overnight high. So I get my scale, right? And now I'm going statistically for this. Because I'm looking for this so I can consider getting short. That's kind of where I'm thinking. But, so anyway, there's my scale hanging out, going, okay, got you now. My stop is below here. I come under. I do not get taken out, though I'm thinking I'm going to get taken out. And I come back across again. This is now resistance, variable high volume node. So I'm still sitting in my long, and I need to clear this to get to that. So I'm still long. Where do we come? Here. So I know that I got to clear this. This is a variable high volume node. And the way I look at these is this is the auction. And what the way the auction works, it's volume based. So I know the stops are here from this leg. So I'm okay with this going for this here. Because I know, like you, it doesn't mean it has to get there, but it's a pretty good bet. And that's the term, bet, that we're going to take. If we rotate, these guys are going to get taken out. That's why it was a scale. But here's where things get kind of funky. When this shifts down here, it is saying, now this is language, this might be too high. So I know coming back that this is resistance and the stops are here. Okay. Now I come above it. So right here, I'm going, okay, not too bad. I can handle this. And I'm looking for it to pull back here and then continue. It does this. It comes under here. So I'm going, all right, that's a problem. So now I come back up here. So right here, I've got my variable high volume node. So I'm looking now. So I was long, short, and I'll show it to you. So here I come up to this, and this was absorption. So right here, I'm going, okay, I took out this swing. I got this. I'm in two-sided trade. Look at what's going on. We took the high of this out, and we took the low of this out. So I know at the moment, nobody is in control, except this is the last rotation down. There was absorption here. There's absorption here. I come out here. There's absorption here. So I have my buyers here. I've got my sellers here, and I have no idea. I truly have no idea. And I'm going, what's going on? But VPOC is here, which is saying this is too high at the moment. Because the volume point of control is here, I decide to get short. Now, take a short. I get a scale. And I'm going, okay, now my statistics, because I'm thinking, well, and this is because of the VPOC location. I'm thinking that we're going to go down. Okay? So, fine. Get a scale. I'm sitting, going for statistics down here. This is for the shorts. Feeling good, looking good, think it's wonderful. Settlement is another target for me. And the overnight mid, the naked volume point of control in this. So these are the targets on the short. VPOC migration. I'm going, this is looking better. Too high. Let's label it. And this is where trouble started for me. I'll show you why. That's my short. I'm just looking over at my position. I got a position on here, and the way things are going today, it's probably going to take all day. And even that doesn't mean anything. So here we have VPOC migration. This suggests to me this is too high, this one is too high, and if that's too high, and I can push off, I'm going to get to my targets. Okay? Now, 9 a.m., we have a report, and that's a problem, of course. It's a UOM, and there's a bunch of stuff there. And with UOM is a fairly sensitive report. Now, it's the UOM final, which is not as material as the UOM pre, but we can get a jiggle in the market. So I'm looking for this, and based on everything I'm saying as well, based on what we did up above, we didn't get to the ETH high, the VPOC's moving lower. I'm staying on the short, and I got my scale, I'm risk neutral. So here's what happens. The report comes out. I think one tick this thing. I'm going for this and down here. Okay. One ticks and then boom, off it goes. So I get taken out and I come up on the other side and I'm going, well, I'm not going to tell you what I was saying, but I'm going to say is, look what we did. We came here, bounced back here, then came up here. So then I go, well, okay. And now I got to get long. So I'm off my shorts and now I'm getting in the long. And I really am disgusted with it, but I have to just kind of try to get in alignment. So look what we do. So I'm looking for a long. I have a variable high volume node here. Now, when this thing is bouncing around this developing volume point of control, What it's showing us is where high volume is. And what the market is trying to do is figure out value. Well, maybe this is too low. Well, now this, so this was too high here. Now it's too low here. So I break high, I pull back. Now mid and VWAP. This is the retail price. If it's too low, I can get long. So I'm on the long side. And this is a support area and down here. So I'm now long. I'm going, all right, back here. And I have to tell you, while I was not especially excited about it, if you know what I'm saying, statistically, the previous day's high or low has a high probability. Now I'm thinking, yeah, sure, like in your dreams. But what I think and what happens are two different things. I cannot allow myself to be influenced by my opinion. And even sometimes, now my experience suggests this is probably not happening, but statistics suggest it might happen. And given where yesterday's low is, if we're going to test the percentage probability of checking the previous day's high or low is about 63%. Taking out the previous high is 63%. Past performance, not indicative of future results. So I'm saying, well, it's better than 50-50. Trend is up. Now, the problem is it's Friday. The market is long, so I have conflict. So I just kind of go, well, all right. So I'm long. I get my scale, and now I'm just hanging out. VPOC migration, suggesting higher. So I'm sitting long. I'm going for this and higher. That's my trade. This is support down here. I get my overnight high, wherever it is, there it is, target, and I'm going, and then one for the Hail Mary passes, I think of it. If you guys know American football, that's when they just throw it into and hope somebody catches it. And this. So this was my target. So anyway, so I got two out of this, and I just sat with it. I'm going, well, I can't get out of it because I'm over the ETH high. My VPOC is up here. This is support. This is the retail price. And all I've done has been flip-flopping around. So I'm staying long. I'm not thrilled. Others in the Trader Lab, in the NQ, I think, because if you look at the difference today, the NQ is weak and the ES was holding everything up. We were even talking, just as a little side note, about spreading in the Trader Lab. In other words, long ES, short NQ, because you sell the weak and you hold on to the long. And if you look even now, the ES is only down like a quarter or unchanged, and the NQ is down 102. That's what spreading is about. Another conversation for another time. But and it's not something we do in Trader Lab. But I'm saying is that's how spreads work. So we were talking about that. So I was thinking about it also. I'm going, well, the ES is not going to run away if the NQ is sinking into the sunset, but I have to follow my plan. And there are times where, there's something screaming in your head, but I have found that my emotional state does not over time make dollars for me. My plan does. So I'm just sitting along with a runner for this, and I'm just sitting here. Once I come back under here and come under here, then it's absolutely game over. So what I did is I reversed, I got short, and I'm still on that short, and that's just what I'm doing. I'm risk neutral. I have a target there and here. And, I don't know. It could come down further. It's not my job. To get here, there's a probability. Let me give it to you. About a 67% probability to get to the overnight volume point and controls, an 82% probability. So this is a target. This is a target. Getting to here is not a high probability. To get both of them, if I can find this, is about 24%. So we got the overnight high. There's a 24% probability to take the ETH low, and the value area low is about a 58% probability. So these are primary targets for today. Now, the market can do anything. It doesn't care. This might be the low of the day. I have no idea. We are in two-sided trade. Today, if we come back in here, there's a possibility of coming here. That is also another structured trade in TraderLab. And you have to, look at the range here. It's workable, and here's another reason why this trade might work, the long, not a recommendation. We have hit an initial target here. So that's a target for me on a short. And then I have additional target open down here. And then I just manage this thing. If I get a long, I would close my runner. I mean, I'm only trying to pick up a couple more burgers out of this thing. It's not much, it's a couple points. But I trade statistically, and it's 5,800. What a fine number. And there's probably going to be a reaction here, maybe. So for me, I'm holding a short. My next trade will potentially be a long. Not a recommendation because I'm, what's the term I like to use? Clueless. Here's another piece you need to know. This is an outside edge of a consolidation. So this up here, I'm just going to show you what's on the chart here. This is the chart volume profile. And it's showing me too high. This was too low. Remember, this is too high. I came above here, rejected this. It's too high. And I have fallen out of this. I am now down here. This is a distribution. Inside of this distribution is and I call these microstructures. There's high volume. This high volume is a retail price. It's the same as this, but it's in a shorter time frame or fractal. The outside edge of this is right here. It's called a low volume node. And all they are consolidations and outside edges. There's no volume. In other words, we come up here, no, and then we come down here. And then the buyers were absorbing here. So the sellers are here. That's where they are. The buyers are here. The fair price in this auction, and that's what this is right there. And there's the high volume node, right at settlement. If we break down from here, this is the next target. If we squeeze up and get through this outside edge, we're coming here. So that's the plan at the moment. And it's not a recommendation because all trades, are random as far as the individual outcome. That kind of brings you up to speed. Not an exciting day like yesterday where we had big range. And I will tell you, in TraderLab, we had a terrific day. Many of us, not everybody, because we have traders that are newer traders, and our senior trader has over 50 years trading. I have 45. So, there's a full range of experience and even methodology. I don't use indicators. Personally, what I do is I trade with statistics. And statistics are level based on participant behavior. So that's why this is a target. And statistically, and you have to vet these for yourself, these are available in TraderLab, it has an 82% probability. If you understood that, would that help you once you get a sense of direction? And, direction can change, anything can happen, right? Trading. Would that help you? Would it help you knowing this is also a target? So this is my next target on my current short. I got to keep my eye on it here. I see absorption here. We have to be aware. So what do we have? Look at the selling icebergs. Look at the selling icebergs. It's very much two-sided trade. You can see the buying iceberg. So they're just batting it around. But statistically here. Now, that doesn't mean we won't go lower. But in a structured, if you think of this like, and I like to think of it, structured trades, Well, part of the structured trade is the targets. So that's why this was a target. And also even That was a target, even though, it was disturbing for me. I have to follow my plan. And there are some days where I go, boy, I might want to get a new plan, but that's emotional. It's only one day or even one trade. I mean, do you journal and write down your quote feelings? Do you know the voice in your head is not specifically aligned with trading? That the voice in your head is aligned with preservation, survival, not stepping in front of risk, but avoiding risk. That's how we survive as a species. We don't typically cross the street in traffic in Midtown Manhattan against the light and expect to have a good outcome, right? Well, and yet the chatter in your head is don't do it, which is good if you're walking across Broadway in Manhattan. But in trading, that stimulus that says don't do it, this looks like no good, is not what you do, because you have to do the opposite. Very hard. So you need to understand the self-talk. That's why I mentioned, I think at the top of the stream, that the self-talk is I don't expect, I suspect. It's nuanced, but when you're speaking to yourself, you're also listening. And who's speaking to you? I call it Hyde, Jekyll and Hyde. Hyde is an emotional being, if you will, part of our persona, our reptilian brain, our survival brain, if you will. It's always going to be speaking to you. So you do need to be conscious of it. And you do need to remind yourself that you appreciate Hyde trying to keep you from getting run over in the market, but that Hyde doesn't understand trading and the primal mind did not trade. It hunted and it stayed away from the saber-toothed tiger. That hasn't changed. Except here we're hunting and we are running towards the saber-toothed tiger. I hope that makes sense. How you guys doing today? Overnight VPOC has not been tagged yet. Perfect pair. How we doing in YouTube? Are you guys conscious? It's not an exciting day, but you know what? This is a day like every day in the market. Some days have wide range and opportunity. Today was two-sided. However, the sellers, and who are the sellers? Does it look urgent? I think it's long liquidation, but that's not what's important. I mean, I don't need, you know, what I need is, let me see, did I get my target? No. What I need is to get my target, which is right up right in front of this. Now, and that's not a recommendation. This is concerning. This is absorption. So there's your sellers, there's your buyers. They are absorbing. Now, here's something to think about. This is too high. This is resistance. We are now at the moment below it, too high. We are now forming another distribution. What we would like, or me would like to see, is that we get below these buyers, because that's important. Because right now the buyers are here. If I can extend below, I'm going to get my target, hopefully. And I always give it a tick or two. I don't try to stand on formality or rigidity. There, and it's 5,800. So I don't think it's unreasonable for buyers to be in here, right ahead of 58. So I'm looking to exit a little above 5,800. Not a recommendation because I may never get there today, right? So, because this is a high probability target and this is a good target. So these are two good targets based on statistics and probabilities. And remember where my next trade is. Subject to, and it's not a recommendation, it's a long to here. This is what having a trade plan is. And it doesn't mean it'll work. It doesn't mean anything. It means nothing. We do need to stay below here. So what I know is I got a target. I'm managing a trade, and this is subject to individual trade plan. I know if I get up above here, I'm taking a long. That's what I know. That's all I know. So we'll see. Anybody have a question? Please post them. And if you're in YouTube, thanks for visiting. Uh, Kareem, overnight VPOC. Well, it's that's off your charting software, really. Um, if you have Bookmap open, for the full ETH, it'll show you. You can get it from that if you have an ETH chart. I get these levels off Investor RT. It's my main trading platform. Now we have to be cautious right here. Remember, the absorption is here. So for me, I'm still holding my last contract and managing it. If I come back in here, I will be getting long. It's not a recommendation. And I can prove it to you. I take stops like everybody else does. What's new? This is trading. So what we have is absorption. This right here, when you come above this, you could be out of the short, but the sellers were here. These buyers were absorbed. This is your resistance, you see. So you got to be very careful in this. And let's go back and look at the structure. So sellers are here. This is too high. See you later. Now, the buyers try here. They are absorbed. The sellers take over. The buyers try here. They are absorbed. The sellers take over. Where's the structure? It's right there and there. Where is the long? It has to come through this. You see what I'm saying? So this is where the buyers were. This is where the selling volume was. That's why this is resistance. This is support right there. And I am now flat. This is Trader Lab. Now, guys, what I do doesn't matter. I'm not saying it's the best plan on the planet. I know it isn't, but it's what works over a large sample size. So this was my target. Now, I don't have more. There is another target down here, this, and we got this sitting down here. This is another potential target, this. But for me, I'm done with the trade. Now, there is another trade here. I think I'll talk to you about it. It's a continuation trade. It's a pretty aggressive trade. So I'm not, and it's definitely not a recommendation. It's going to be a short in this area for continuation lower. It is not one I recommend for developing traders. It is more advanced. So let's think about this. This is the retail price from the ETH. If it's still too high, we can come down to the next level, which is the value area low. So this is a potential short setting up, but it's an aggressive trade. Let's watch it. This is a more advanced trade. It's very aggressive. And if you're going to trade this thing, you really got to be on your game. In other words, if I was to get involved here, I'd be using a shoehorn with it. Sellers are here. Buyers got stuffed here. There's passive side here. Here the buyers are. There's a passive seller in here. The sellers are here. The sellers are here. The sellers are here. The sellers are here. The buyers are here. Right here, we have our sellers. Notice we have an iceberg. He's saying, come on, give me a shot at this. This would be an extremely aggressive trade. And this can get picked right here. You do need to be a little further away from it. So if you put your stop here, you're asking to be taken out of your trade. Let's watch. There's your buyers. Your sellers are here. Your sellers are here. You see it? That's why the stop cannot go here. It needs to be further away, up here or up here. And this would be a shoehorn trade. You know, you'd be getting in like in here. Your stop would be, if you really want to try to, finesse it. But look at the risk. You're talking about maybe a 6-tick stop. And and then that means you need a 6-tick scale. And this is definitely not a recommendation. I consider this a aggressive trade. But here's the potential on this trade. And it's not a high probability trade. So it's an aggressive trade. So what do we have? The primary trade is done. This was the target. If we stay below here, we can extend. Or we'll come back across and then we'll set up the IBF, which would be a long out of here, back to the mean. So we'll see what it does. And again, this is really an advanced trade. It's a derivative of those 60 PDFs I share of structured trades. And everything I do is derivative in some fashion, So when I discuss this behavior, which is auction based, I do it in different time frames as you think about it, or fractals. A fractal is a micro distribution. These are fractals. Can you guys see the short here? And remember, I don't call trades. You don't need to take my stops. Fun trader, this process works for all markets. Crude, jelly beans, because this is how markets work. This is really what the market is all about. Now we got a lot of absorption coming down. You got 1,000 icebergs, 1,200 icebergs. This is big. Now, for me, managing the trade aggressively, not a recommendation. Again, microstructure is here. So there's no risk for me on this trade. Scaled, risk neutral. It was a 6-tick stop. Now I'm going to just manage it. Not a recommendation. I would like to see the sellers get below these guys. And often what happens here is we test below and then reverse. That's a separate conversation. It's all order flow and iceberg phenomena. Let's watch. These are not recommendations. This short is not a recommendation. I just wanted to share it with you. Now, the thing about what I do, since I don't use indicators, I use order flow, I use market mechanics, in other words, auction, how it works, and I'm using a profile because I'm looking at the distribution of the volume. I don't have a red light, green light, anything. Been there, done that. So I don't do that. So what I do is I'm looking at the interaction and the behavior of the participants. Isn't that the truth of the market? And when you use indicators, what are they doing? They're taking the output from the participant behavior and interpreting it for you. This is a very important, right here is a very important behavior for directional continuation or reversal. Let's watch it. And this is where the order flow is very important. This was a big deal here. We got to watch this. So for me, not a recommendation. I could be very close to blowing the canopy off and exiting the jet because that's how significant this is. Okay, I would be out of this. Just telling you. Now, here's how order flow was so important for this. This and that. This is how the stop and iceberg detector can help you. Because these sellers were absorbed. That's the absorption. And if we can't get below it, or we come back above this, then the trade is over. I hope that makes sense. Can you see the rationale behind this? Yeah, was that my order? Which one? The buying? No. Alex is asking in the Bookmap Discord Trader Lab community, how do I use the CVD column? This is the chart volume delta. All it's doing, and it's only looking at the delta that's on the chart. So if I bring more in, you'll see more. But I'm only interested in really what's happening right here. And those sellers that were absorbed were here. You see the red dots? And the green boxes is the absorption. So I know what's going on here. I know there were sellers here. But if I look over here, it also tells me the same thing. So this is telling me what's on the chart, where the sellers are, which is down here. And you can see them there. Also, this bar of volume is also delta. So I see the sell delta, big, huge selling absorbed. So I've got this kind of in a couple different ways. I'm seeing the same thing. I can see it here. I see it here. I see it there. So I hope that answers your question. So anyway, that was that. Okay. But here's the beauty of all this. As soon as we saw this, we started discussing it, that we had to get below here and that this was a significant outlier. So what you would do then, this is really trade plan specific. This right here were the sellers. So we knew sellers were here, sellers were here, buyers are here, buyers are here, sellers are here, sellers are here. There's a buyer under there, sellers were there, sellers are here, sellers are here. Needed to break, right? Buyers here, buyers here, buyers here, sellers there. So right in here, this is your consolidation. And where's the high? Let's look at this thing because this is useful, I think. So the high volume, so we can break this down. Let's just put a little cap. I'm going to draw a little rectangle over this because this is kind of how I try to look at the market. And I underline the word try because I'm always just trying to read the behavior. This is the outside edge. This is the bottom side edge. Actually, it's over here. Okay, there. This is the high volume. So when I'm in this chop, I have sellers, I got buyers. And one side is going to win. Now this tells me, warning Will Robinson moment, this could get ugly. So right here is the break. This is where you'd cover your short. And yeah, you wouldn't get much for it. You'd be scaled. It was like a 6-tick risk. And you'd pull a few burgers out of it, right? That's it. Now, what else is resistance? That is the same as that. This is also a potential short. Should be paying attention, but I wanted to explain the rationale here. Now, let's talk about what this is. This is the high volume in the ETH. It was a short. If we come back to the high volume from yesterday's RTH, which is a target coming down, it is the same trade from this location. It's right here. Again, this is advanced. And where is support going to be? Here. And here. And this is not, these are advanced Trader Lab processes. They're not really something I talk about, really. Because you can, and the problem with these trades, and I'm going to say it is a problem, is that developing traders are going to see things in the middle of nowhere and start trading them. The way, in my opinion, that you build the business of trading, and Trader Lab's about business, it's not about playing a video game and getting an adrenaline or a dopamine fix. It's about waiting for trades that are vetted. So I know selling this has an edge. I know selling this has an edge. I know this is very important, and it's either, depending on what the behavior is and where we are, this might be a long or it'll be a continuation short. I know that. So I have a couple of trades. I had this one short. I have this one short. And it might only go from here to here because my support is over here. So let's look at the trigger. Now, here's the other part about this. This is location specific. If I see this structure in the middle of nowhere, I'm just going to go, oh, that's nice. Let's look at it. So where is this thing? Buyers, buyers. Here I get my seller. Why does it go up? Absorption. Those guys were absorbed. What happened here? There's a seller. You see the absorption? Buyers above it. This is the delta. Sellers are here. This is the last place of support. Now I have my sellers. Going south, Lewis. But what happens? These buyers are here. Buyers are here. What is over here? This level. It's important. And this outside edge. Now I don't put an order out and just say I'm putting an order here and I'm going to sell. I don't do that. I have my buyers, and right here, as far as I know, it's going to keep going, right? What happens here? I get my sellers. What about this guy? Now let's look at the same thing here. Well, actually, I had a seller here, so that's not the same. Let's see. I got a buy now. All going up, up, up. Here, don't know. If I got below this and this, it would be a short. Wouldn't be a short because I'm not at a level, but I'd say it'd be a rotation. Here, I have my sellers. Looks like it's going to zero. Why does it go up? Buyers. I come up here. Looks like it's going to the moon. I rotate down. Now this guy right here, these buyers here were absorbed. I don't know until my seller gets below this. I break. My buyers are here. Now my sellers are here. There, and there, and there. I break. Suspect. I come back here. My buyers are here. What's over here? My sellers are here. So now it's a suspect. I don't know. I do know I hit this, well, within a tick, horseshoes and hand grenades. This is too high. If I can't overtake this seller, and you notice what happened here, why? What is here? The sellers. This seller is selling here. Listen, this is how I imagine it. I'm filling in the blanks. These buyers could not take this out. There's my volume, which is there. It's a short. To where? Watch. There. Okay? Now, it could be here. 1 second, please, guys. Got to grab this. Sorry about that, guys. I had to take that. So the way this works is, if this is a vetted trade for you, this was where the buyers took over. This is where these guys, did their thing. So notice the behavior. You see how I'm drawing these? I'm just using volume. And I know based on, and I'm using order flow. Now, right here, I don't know it's going to stop. I don't know anything. I don't know where the other side. See, the reason we can't tell, the other side's a limit order book. They're passive. They're not, you know, chasing the market. They just have orders up here. And you have the iceberg. These are limit. They're limit also. So we see the iceberg. That doesn't mean it's going to stop here. It's the change in behavior. That's what changes it. And remember where my buyers are, here and here. That's why this is rotating up here. I got my sellers here. I got my buyers here. When this buyer cannot get over this buyer, then I know here, potentially, and it's always potentially, I have my sellers. So I can be selling this here with a stop here, subject to the skill of being able to read order flow, which, like everything, takes time. Here, I have my seller who's below this buyer. This buyer's absorbed. This buyer's absorbed. Here's a buyer. My sellers are below the buyers. That means they're in control. There's a passive side here. That's how I look at this. So this is a short. Now let's assume you don't take the short. Where's it come back? The buyers are here. What do you see? Sellers absorbing. This is a short. And then you're coming down, wherever. Here. Can you see the logic of how the volume works, guys? Does this make sense? So this is the trade, is back to here. And then it's either going lower or you're going to come out of it and scratch your runner. That's the kind of day you got. It is what it is. The other thing is, I'm going to take you a little deeper, and then I'm going to look up for if you have any questions. And thanks for your patience on the call. I had to take that. So let's watch the behavior over here. Let's just see if we see anything. Now, if we keep pushing through, we got to be thinking about this. Okay, so the short's over. Because now, what you had is the buyers down here came for it at their support. The sellers were up here. The swing high is here. And the next level is here. So let's talk about how you might manage this. And this is something you have to vet for yourselves. It's not a recommendation. Everybody operates in their own fractals or time frames, right? I know is too high. So I can come up and check it. If the sellers here still want to sell, they might come back in and sell it. Now, right here is very important. If we continue higher, of course, north. But where are we? We're still under here, which was the basis for the short, and the stops are here. So right here is a very important level. Now, depending on how you manage your trade, as soon as you get here and you come out over here, you could be out of the trade. Why? Because the volume is here. We break to the volume here. If you can't clear this, then you're going to get that. If you come back here, there's stops right above this level, right there. The sellers were here. What is here? The sellers are here. Here's the volume. Here's the break. Here's the test. It's another short. But this is not I can tell you right here, this is not what I don't want to do this. I mean, look at the range. So in my trade plan, I'll give you a sense of it. The range is a variable. The structured trades are not. If this was 18 points, it'd be the same trade. But because it's this, 3 points, nothing for me to do. This was a decent trade, and this is actually a short. But, what are we in? Two-sided trade. Do you want to trade this? For me, I'd rather not trade. My trade was just coming down to here. And the one advanced one I showed you, which was over there, looking for this low probability, right? Which you guys know. So this is Mike Scalpy, If you want to trade this, that's your business. I'll tell you what, for me, I don't do this. Um, and the reason is most of the time, my risk is pretty constant. If I'm going for 10, 15 points, whatever, like yesterday, my risk is still around 2.5 points or so. In this, I have the same risk. Why would I put risk on when I know there's buyers here? You see, so I can't trade this. I should say it doesn't pay for me to trade it. I can trade it, but why would I do that? You see, so there's times where you just sit and you wait. Um, we all talk about, do you have a position on? Well, being in park is a position. Having no position is a position. So for me, I don't have anything here. So for me, the last trade was this, and actually this I would take to here, you see. But I know what happened here. That's the beauty of knowing these things, because now you have the insight. So when I come back here, this is a short, this, but I'm only going here. Now this, why bother? And it could come back down here again. But the market is short. Let's think about this. If the stops are here, if I come back above here, then I can come back up here. And then there's a possibility to come here or not. I don't know. I don't know anyway. So let's watch this in the meantime. Do you guys have further questions? I hope I answered the question. By the way, guys, if you watched the stream yesterday, it is out there on YouTube. It should be posted here in the library. I don't know if it was actually. We have our head librarian. Let me just see if it's in there. I think it's there, but I don't know. It says fading a 55-point gap. That was yesterday, and that was yesterday's narration. Let me put a link to it in YouTube if you guys haven't seen it. It'll show you this process, just what you're seeing today, except with different range. So, and I really think you ought to grab that and watch it if you haven't, or watch it this weekend. And this one too, this one will not be available, I don't think. I mean, to me, this is, uh, just not as exhilarating as yesterday. This is definitely more challenging. This for me is a much harder trade because of the ranges. Because I have to be very precise and patient, and I have to follow my plan. Now, even this, what am I doing here? 4 or 5 points? I don't trade for that because my risk is around two to three. So if I'm putting, and I don't trade a one lot, okay? So in this range, really, half the range is to get risk neutral. So you see what I'm saying? Where am I going? Here, right? Now I would take this, but then I'm in a different mode. I'm in I think of it, I grew up in New York City, so my terminology is subway purse snatcher, not to offend anybody. But I'm just saying this is purse snatching. And from a risk reward point of view, unless you're very skilled, it is not good for developing traders. It's really more for somebody, who really just has unconscious competence. And most of us, when we're learning the trade, we start out incompetent, whether we know it or not. And then if we actually can build a trade plan and vet it so we know we only interact when we have a statistical edge, just like the casinos do with their games, then our thing is to consciously anticipate the trade because we've got it all mapped out. And then when we have a trigger that we have vetted, we put the trade on, and then we understand, if we have developed a trade plan, where the targets are. That's what a trade plan is. This is what Trader Lab is. Trader Lab is about helping traders build out a trade plan. Guys, there's no holy grail. There's no secret sauce. I share this with everybody. There's 60 PDFs of these structured trades you can download, reverse engineer, plus the Trader Lab community. It's open to everybody, and there's no cost. The thing about trading is you're going to have days where, it's just, you know. And for me today, it's, you know. But using the same process, I also have yesterday. And yesterday is one of the days that keeps me coming back for 45 years because there are a lot of days like yesterday. And then there's also a lot of days like this. And today for me is more limited opportunity because of range, not anything else. And chop, chop is also hard. So you can kind of see the structure, right? Shorts, cover, back here, short, cover, back here, observe, maybe a short, but stops are here, stops are here. So we can squeeze up. It's two-sided trade. So this is not a good short. This is a good short. This would not be a good short. And the reason again is because of this and the fact we tested it. You see, once you get the test, that's it. Now, there are more advanced processes. I'm not going to talk about them in this stream. For some traders, let me just say this could be a long back to here, and up to here. I'm not saying it is. I'm saying for some it could be. All this is very advanced. And I don't call trades, and I don't even want to get into really processes that are going to create confusion and conflict. In my opinion, if you can get the broad strokes together, in other words, trade the range, because it allows you, when you have more range, to be late on your entries. It allows you there's more slop, until you develop unconscious competence, it's just too hard. And what makes it hard is the uncertainty, that's the emotional stimulus, the fear and hesitancy, all that, right? That's uncertainty triggers emotions, fear. So you're in a constant state of fear because you're in uncertainty. If you're fearful and you bail out and you do all these things, you're responding to emotional stimulus. Part of learning to trade, if you will, is really taking a deep dive into understanding our behavior. I mean, our primal behavior, our survival, our fight and flight and all that. Now, I know you've all heard of it, but you probably really don't understand it. Now, the other part is, how do you manage it? That's what we do in Trader Lab. A lot of what I do in Trader Lab is help traders understand what interferes with their intentionality. The way you get control, at least what I found for me, the way you get control or better control, because nobody gets complete control over your emotional stimulus, is statistics, because that's tangible. Emotions are intangible. The responses are to fear and imagined things that might happen, not what is happening. So to differentiate between the two, when you open your binder of your trade plan, do you have one? And it specifically identifies a setup, or I call them structured trades because structure is an important part of it. You know where it's going to come. You know where you will take the trade. You know where your trade would be. You know where your support will be. You know where your resistance is. You know where the stops are. And you know your edge that says statistically, if you sell this, you're coming here. You would know that if you're in Trader Lab. And this is an advanced concept. It's not something anybody ought to do unless you're really got some experience and statistics. Think about it. Do you have statistics, or is your statistic your P&L? P&L has nothing to do with it, believe it or not. The business is based on playing the games that have an edge and accepting the random outcome of each interaction with the other participants. It's just the way casinos operate. That's our business model, gaming. And we're really playing a game, if you will. And the game is anchored inputs, not variable inputs. And, for me, there's no indicators, but neither here nor there. Because I want to be here. I don't want to be, I need 2 minutes or 5 minutes or something, or an oscillator or something. I don't. Been there, done that. So I find if I understand this, does that give me an edge here? Does that also help me understand, if I understand order flow and market mechanics, that this was the target? Why would I say to you guys live in the stream, this is my target? Why? Because I understand how the market works, but I don't understand what it's going to do because I can't predict it. I suspect it. I'm spending a little time on this because the market's slow today, but I want you to understand what Trader Lab is about if you're not familiar. The Trader Lab is about building the business of trading, not predicting what the big move will be, not only catching the big moves and avoiding the stops, all this nonsense that you guys hear just doesn't exist. The casinos cannot select the cards coming out of the deck or how the gamblers play the cards. They just play the games that have an edge, and that's what they do. The gamblers do walk out with cash. Now, I would not be taking this again because I know we have this leg down and I know what happened here and I know the buyers are still over here. So this might be the trade of the century and we go down to zero. In the meantime, I can't take it because I already had it. So boom, done. Okay. And the buyers are here, the buyers are there, the sellers were here, the sellers were there, and they got creamed. Is it ever used the term creamed? And then we pull back to here and look where the support is. It's there. This is actually a potential long, and I wouldn't take it. I mean, I'm telling you, I can read it, but I've got conflict. I'm below. I'm right at this location, and I'm below here. So I have two forces at work. I have something that says lower, and I've got this that says higher. My support is here, and my resistance is here. How do you trade that? So for me, I don't trade. But you guys can narrate this. I want you to see structure because that'll help you and why. If you understand the why, the buyers were here, the sellers are here. Support becomes, the concept, resistance. I break down. The buyers are here, the sellers were there, and we got that resistance. We come back here. I get my buyers here, we come back here. Where do I test? To the tick? There. Isn't this interesting? So if this is too high, now there's two possibilities. I rotate back down here, which is not a trade I would take because of this. And we can ball out this. So I'm not calling trades because, this could be a fair short, but we already know the buyers are here. So how would you take, let's imagine this together. How would you take this trade? Not that you would, but let's just think about this. Let's assume for a moment you were going to take this short. You know the buyers are here and here, right there. The buyers are here. The sellers are here. What would you do? I wouldn't do anything, but I want to know what you think about what you might do, other than not take the trade. How would you manage this trade? And let's assume we don't know anything about this. Let's just think about it. Would you sell this? Where is your support? Now I'm leaning into scalping here, which I don't do. Been there, done it. Don't do it. I used to be a high volume trader many years ago. I'm talking like over 20 years ago. So I don't do it anymore. I came close to getting a membership because of that to reduce my costs. 100 trades a day, that kind of thing. And you do need at least a seat for that. You could reduce your costs if you do enough volume. Just saying. How you guys doing? Whoops, I'm not seeing the chats. Come back here. Okay. Coco Bolo is asking me if I would be taking a short up here. I would be looking at it. sellers were here, you see, and the sellers are here. This is interesting because this is a trade for me, except because of this. So I just would not be in this trade. If I was a scalper, let's look at structure, micro. Again, I don't know if you'll find this usable, but I think it can help you. The sellers were here. There's your rotation. The buyers are here. So there's your rotation. The sellers are here, right here. There's your rotation. The stops are above here. So it can pick. And if it picks, I call it a stop pick, then, and there's exhaustion, it actually sets a short up, which is there. You see. So, but it's not a trade. You know, I'm just giving you some ideas here. The buyers are here. See where they are? Let's look. Now, this is very nuanced, and this is not, this is really order flow oriented and volume oriented. There's no range, but you can learn a lot by understanding what happened. The sellers were here. That's why you get that. You'll see the buyers got kind of motivated here. These guys under the bus, these sellers. So what happened here? This is where the breakout was. We have come back to where the sellers had to cover. There. We come back to this, right to the level, and it sets up a rotation down. Now, again, I have no trade, but I can read it, and if you're in Trader Lab, you would be able to, you would know this. You wouldn't know what would happen, but as soon as you get a trigger there and you pull back there, you can take a short to this. I mean, it's not tradable, okay? But this is Trader Lab trading. Now, if this is in your plan, you could be taking this trade. It is not in my plan because of range. That's all. Otherwise, yeah, this trade, exact trade here, I would take if we didn't have this. And this doesn't necessarily mean we're not going to take this out and go to the targets that were down below. So now if it takes it out, then that trade would, but look at the icebergs. You see this here? We got another iceberg sitting out here. These guys are looking to buy. Now, the thing that happens here is, do the sellers consume this buyer and continue? Or do the buyers, like over here, and there's a ton of them here. Look at this. 500 here, 2,000 here. You probably got about 3,000 icebergs here. Are these buyers going to come back in if we come back here? Here, they came back in. More iceberg buying here. So this is support at the moment. So what I know is if I'm getting short, I'm only scalping. And there's no range, okay? But we can learn from this, right? Are you guys picking something up here today? Heterodox is asking me, at what point do I have useful information versus noise? I guess it's all useful to me. The noise, for me, is I define noise. In other words, I understand what's going on here. I can look at this and I see, yeah, we're going down. The thing I know is I have limited range here because of this behavior. And I have support sitting like right around here. Right now, this is support. So that's what I know. If I get short, I mean, this is all I got to work with. I'm not trading it. All right. And the thing that's putting the whole thing kind of in the, on tilt is this. I understand all of this. It doesn't mean I trade it because I have to have range. I am below this. This is significant. It still suggests to me lower, and the problem is this. So I'm telling you, it's lower and this. So I got this and I got this. If I'm taking this short and this short, which are all shorts, I got a problem here. Doesn't mean I can't take it. I just, my last trade that I was on was down to here. This thing, whatever it was, down to here. And then we had another short. I think it was here. I had a short here that I narrated. And then this was a short, bang. Then we come up because of this thing. You take it out, come back here, sets up another short, back to here. Come back here, sets up another short. This is still okay. This is still another short, but you got this as a problem. So yeah, I guess it's noisy, but if you can read it, it's like, this is language. The way I often get asked, well, what is all this stuff? I only use a couple of trading doesn't have to be complicated. I know we think it's complicated. Let's use the real term. It's random and uncertain. I think that's more of a definition of complicated than trying to figure out what's going on. If an individual learns to speak the language of the market, most of us use indicators. It's like Google Translate. An indicator translate participant behavior. What I am doing is I'm not using the translator. I'm using the behavior. So I'm in the real time narrative of interpretation of a foreign language. And most retail traders start out with a box of indicators trying to get the translation. That's really what they're doing. And then they use multiple time frames, so multiple translations that can be in conflict and often are. So I'm not doing that. So I can really read this. So that's why this against this sets up a short that I would not take. And the reason I'm saying I wouldn't take it, I don't want you guys taking it. What I do in my trade plan is not really that material, but you should not, but in order to know what to do, when to do it, we need to recognize the behavior. So if you're using an indicator, I don't know, maybe it would tell you to get short. Where? Here, 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 here. Where would you get short? I don't know. I don't know the answer. I don't use them. There's resistance. This is a short. Where does the indicator get you short? Over here? Me, I'm short up here. Where's my support? It's there. Where does my indicator get me out? I don't know. I can't answer this. I'm just saying in general, I don't do that because I don't want to do what other retail traders do. I've been there, done that early on. And I started in 1980. And indicators were just coming into the public or the space. It was mainframes. There were no PCs and there were no internet. It was a whole different world. It was all floor traders. There were no domes. If you wanted to place an order, you picked up the phone, called your guy. So that is how it worked. So I came from that. All my friends were floor traders. They thought I was a lunatic because there were not off-floor traders. So I was definitely lost, and I didn't know enough to know I was lost. I kept doing what I thought, was the right thing to do, and that it was persistence. It was not. I didn't understand. This is not a business of prediction, which is what I thought it was. This is a business of maybe. Maybe, which means probabilities. The casinos are built on maybe, but over time, because they only play games that have a statistical edge, maybe over time, they'll extract the dollars from the gamblers, not the next hand, not the next trade. That's what Trader Lab is all about, helping developing traders understand this is a business, and that if you treat it as a business and not a video game, over time, if you have the ability to actually do the work, and it is work, it's not, quote, the fun part of trading, it's the work side of it, developing the business. If you're going to start a business, you don't just go and, you can't do what I do. You can learn from what I do, but you won't do what I do because you're going to find your groove. There are traders, and I, talk to a lot of traders, obviously, that they would love to take this trade right back under here for the stops that are under here. They would love it. I don't do it. They'll go all day. All they want is to pick up a couple of points. And in fact, I mean, a lot of guys in Trader Lab are running these funded, not funded, these, call them whatever you want. They're not really prop, but whatever they are, the funded programs. And, if they can make $100 on a trade over 20 accounts, that's a great day. Well, not what I do, but that's all they want to do. So they can come to Trader Lab and they can do that. Other traders, and we have in Trader Lab, and we kind of joke, we'll put a trade on, have a stop at the high of the day, and go to the gym because we trade the targets. And they know statistically, and they'll trade a range. I tend to go for larger swings, less wear and tear. If you're interested in Trader Lab, there's 60 PDFs you can download. There is no cost. They look like this if you haven't seen them. And a lot of these are, trades I took, live trades, with scales, entries, and the rest of it, and others are screenshots. And I put these together. I'm not a vendor. There's no cost. There's no specific course. What there is guidance and a community of other traders that are doing the same thing in many derivative fashions. This is from 2020, and this is what I put them together. Trader would say, "What are you doing? How are you doing that?" I go, So that's what Trader Lab is. And I think it's amazing that Bookmap actually has something like this available, and there's no cost for it. Now, there's something else I got to tell you about. If you want to visit the Bookmap Discord Trader Lab community, you do need to use the link in the bottom of YouTube and come to Discord, and you need to verify your email address so we know you're not spam. There's another piece to this. If you don't have Bookmap, there is a free subscription to the digital version of Bookmap. It's the most amazing thing. Most of these software, companies, you got to pay to try it. Oh, here's the trial. Oh, and by the way, give me your credit card. No, Bookmap doesn't work that way. They have a free trial version. And if you so then theoretically, you'd be a subscriber, right? If you are a subscriber, you would be able to attend all the subscriber-specific streams and webinars, the educational content that is only for subscribers. There's the Bookmap Academy, where you can get mentoring and coaching. And yes, you have to be a subscriber. But I don't know if they've really thought about it. But if you take the free version, the digital version, which comes with data, so you can get your hands on it and play with it, you're a subscriber. Think about it. Please give a thumb up if you're visiting in YouTube. I did put a link up there for yesterday's stream. If you haven't watched it, watch it this weekend. Grab that link, save it to your desktop, send it out to your trading buddies. I think you're going to get some terrific insight into how to use order flow, auction market theory, and overlay it on a volume profile. No indicators, specifically understanding market mechanics, how it works, and how you might get aligned with it at times in a business plan. If you're interested in that, visit the Trader Lab, and at the very least, try watching that stream from yesterday. It's pretty good. Even I liked it. Have a great weekend, everybody. Thanks for visiting the Trader Lab. Look forward to seeing you next week.